All right, welcome everybody to the Axia Futures Bookmap webinar. We've talked about this for quite a while and have wanted to have co-author Bogdan Stoichescu come over here and reach out to us at Bookmap and our traders over here and give us the insider scoop here. What's kind of going on behind the scenes with or inside of Axia and some of the insights from some of the incredible traders that they have over there. So Bogdan is co-author with Alex Haywood, one of the founders of Axia Futures, and he's a trader over there as well. So he is right there alongside all of the other traders, and he wrote this book to give us this additional insight. So let's go through the risk disclosure, and then I'm just going to turn it right over to Bogdan. All right, so general disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. The risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Bogdan, take it away.
Bruce, thank you so much to everyone watching and listening right now. Thank you so much for your time. I hope it will be useful as it is memorable and there's a lot to get through. So judging by the menu of what you see before you, it's going to be very, very wide, not as deep because, as I said to Bruce, each one of these points is like, an entire webinar in of themselves. But it's essentially what we're going to do. We're going to be looking at, things like understanding the importance of navigating, not solving markets, thinking in career versus exercise. You'll understand what that means in a bit. Looking at things about how all these traders express edge through order flow, so on and so forth. You've probably read the rest of the slides, so I'll just get cracking. But the entire point is that basically to examine all these features, all these topics through the stories of the people in the book and those on the floor. But some of you may be familiar, but for those who are not, I will quickly go back and look at what is Axia, the company, who I am, what is the book about, and in doing so, we'll do a bit of a story. So quick story time. So Axia came to be right on the eve of, or on the Brexit referendum. There's a whole story in chapter 1 of the book about how basically it all came down to the wire. It all came down to one trade on Brexit night back in 2016. It was a make or break morning. You can it's kind of spoiled by the fact that, Axia is still in existence now, so you kind of know what happened, but I'll leave it for chapter 1 there. But this is a shot of the very, very early, one of the early offices back in 2017, 2018. A bit, we can see a bit here, if you can see my mouse, Alex Haywood in the center. But now the floor has grown into the townhouse on the left in London and is comprised of about 100 to 150 people globally. This is just the London office. There's also an office in Cyprus and little teams, satellite teams pocketed around the world. Here's the view, for example, from the second floor with some juniors at the time who are no longer very junior. This was from a few years ago. And there was I as well. So this is me back in little old me back in 2019. Trading on the floor, giving it my all. Prop trading was the hill I was going to die on. So I was very committed, all in. Along the way, though, Alex came up to me and said, "Look, you seem to be semi-literate here. I always wanted to do a book to capture all these guys. Why don't I give you unlimited access to the top guys at the firm? Let's write a book together." I said, "Of course, why not?" This is a picture of us going around to interview the Razor in his office in Poland in 2021, coincidentally matching fashion at the time. But throughout all that process, after 3 years and 7 months, essentially out came this book, Traders of Our Time, Navigating the Market's Impossible Landscape. And so basically, as you can tell, we're both co-authors, and I think we made a very fine team, and I'll explain why in a minute. Just on Alex's front. So Alex is someone who's been, himself a trader since the early noughties, grew up around the prop industry around in London, has led teams, built teams, is the co-founder of Axia Futures. And he basically brings to the book and to Axia and to everything Alex does a very top-down approach because he's someone who's, seen it all, built team, seen the career of people grow and fall over so much time. So he sort of brought that top-down approach in the book. And for myself, it was basically, like I was a someone who's trying to get into a prop firm. Both started in 2015, 2016 as a retail trader, trying to figure it all out, but with a specific goal of getting into a professional scene. And then I did in 2019 with Axia. Then I explained we had this book interim. The book was meant to be basically 6 to 9 months. What could be so hard? That's how all great journeys start. And as I just said, 3+ years later, out came the book. And actually, now I am doing. I'm running. I've basically founded something called the Asymmetrist, and I've returned to the trading floor as a writer in residence, not as a full-time trader. Just to correct you there slightly, Bruce. But basically, I'm a writer in residence embedded onto the trading floor, and I'm sure there's a lot of the audience here is overwhelmingly American, so I hope you'll understand the reference that if you think of me as a sort of less cool Hunter S. Thompson riding with the Hells Angels, but those Hells Angels are actually the traders. That's basically me. So every consider the Asymmetrist to be a continuation of the book, and all that means is basically uh, the stories and everything are all fresh, all from me. I'm like a conduit from the trading floor, and that's what I'll be discussing here today, just all direct from source off the trading floor. So within the book, and everyone you are reading or seeing, you've probably read about them, heard about them. Out came these 10 traders with these very strange aliases: the Razor, the Collector, the Adventurer, the Warrior, the Godfather, and so on and so forth. Aliases for different reasons. One, to make them anonymous, to give to those who obviously rightly so wanted to stay anonymous. But more importantly, as I said to Bruce, that they're much more memorable as people you can refer to in your mind once you know their stories to help you diagnose whatever issue you may have now and in the future. So I hope the alias has a double effect to your benefit. And these are the people I'll be discussing in today's webinar. These are the people on the floor I write about all the time, and so on and so forth. So without further ado, before we begin, very quick story. Before I went to do the book around 2020, 21, uh, prop trading had a certain meaning. I came back out of my cave. I lived in self-imposed exile to focus on the book. I came back, and all of a sudden, everything is a prop trading firm. Everyone's using the label prop trading. I wish I addressed this in the book when I realized at the time. So unfortunately, the prop trading label is a bit dead. Everyone's like the word scalping; it's a bit dead. That's a huge statement to make. I'll qualify the whole scalping thing later on. Not to worry, but yeah, everything's now prop trading. So what do I mean by this? Again, in of itself is a huge topic. I don't want to derail our session today, but just so you know, when I'm referring to prop traders, prop trading, I'm referring to it in the brick and mortar sense, in the sense of you have a firm, the firm recruits you, the firm backs you, the firm grows you to your utmost utter capability of becoming, 7-figure plus trader. The firm takes a cut of that in the way, for example, random example, in the way Substack, you come onto the platform in Substack, you grow your publication, they take a cut when you start making money as a Substack, and so on and so forth. That is kind of the traditional prop model. And there's so much in between: an entire IT firm, an entire IT firm basically attached, an entire risk management attached. There's much more to than that. I don't want to derail too much right now, but I just wanted to say that when I'm referring to prop firms, I do not mean necessarily the pay to get funded kind of thing, because that creates a huge problem, which I'll get into in a minute, in the way of thinking about skill development and this obsession about beating the rules as opposed to becoming a market navigator. Okay, so here's the menu one more time. This is exactly what we're going to get stuck into, and starting with none other than the importance of navigating and not solving the markets. Okay, so I think every fundamental misassumption begins here. This is something I've just written actually on the Asymmetrist. The ultimate sort of statement, the ultimate upstream question, which is the trader's original sin is attempting to make an infinite process finite. I hope everyone who will go on their trading journey and years afterwards, you will think back to this webinar, maybe to be optimistic, and you will hopefully agree to understand how true this statement is. All the success And all the failure begins and ends with trying to make an infinite process, the markets, finite, meaning yourself as a trader and as a human, a finite trader and human. And everything begins and ends from there. I'll circle back to this towards the end of the webinar. However, more concretely, it means that you have to understand that the markets, joining this idea from markets are meant to be navigated, that markets are a complex environment and not a complicated environment. This is something I actually picked up from the trader The Sphinx, who is right at the back of the book, the end of the book, which may be a little spoiler. It's maybe the beginning of the book. Anyway, I will don't want to digress. Who hit me? He's the kind of trader who you ask him a question, he gives you three questions in return. Everything he was talking to me inadvertently was leading back to this ultimate thing that, you're meant to navigate markets, things construct themselves, you're in a complex environment. Obviously, I didn't really appreciate this on the very first interview back in 2020, but that's sort of this overarching implicit important thing that everyone has to realize as someone who is trying to build a trading career. Let me qualify this a bit more. What is the difference between a car and a rainforest? What is the difference between a bicycle and a weather pattern? And here begins the fundamental misassumption that everyone approaches their trading in a sense that the markets are complicated like a car and not complex like a rainforest. Meaning that if you take apart a car, if you want to have a blueprint for a car, you can download that blueprint and you can put together a car. You'll not be surprised when you put the parts together. Okay, that's a complicated environment, shall we say. But the rainforest, and as you will see, the markets are a complex environment. Take the component parts of a complex environment apart, put them back together again, and let me tell you, you're going to be surprised, and often brutally so. How else do you understand a complex environment, a complicated environment? A complicated environment is static. It basically never changes. There are some caveats to this in terms of if you are familiar with StarCraft, that is the screenshot at the top right, and we're also looking at chess and Go on the left. I include these because they are the poster children for games that quote unquote have been solved. They have been solved by algorithms. They've been solved by quote unquote AI. Meaning that in a static, complicated environment, they are computable, they are solvable, and you can iterate your way to understanding what is the best playbook, the best concurrent action now and forever. Okay. However, the markets are not complicated. They are complex, meaning that they are much more similar to a rainforest, a weather pattern, or the diagram here that you see of an ant colony. There's many more examples. What are some features or traits of a complex environment? Self-organization of spontaneous organization into different kinds of behaviors. So like patterns that just occur spontaneously, as they do with schools of fish or flocks of birds. Chaotic behavior, as I suggested earlier, that means basically when the parts are all put together, there's sensitivity to the initial conditions. So if things are slightly off by a tiny minutia or just very, very tiny, the outcome of things being slightly off at the beginning is going to be drastically different at the very end. Okay. Fat-tailed behavior, meaning that you're going to be surprised if you try and model things through a normal distribution, meaning that the so-called once-in-a-lifetime events happen monthly. You're going to be surprised. And adaptive interaction, the most important, between participants. So I see what you're doing, you see what I'm doing, you're going to be adapting to what I'm doing, I adapt to you adapting to me, and then you adapt to me adapting to me to adapting to you, and so on and so forth, and then make that bigger by an infinite amount, and there you have your financial markets, okay? So all comes from here, that markets are meant to be navigated, not solved. You can solve a complicated environment through brute force computation, but you can only navigate the complex environment, and that is important. Let me tell you something else before I move on. A complex environment can act as a complicated environment to adapt that Keynes quote for longer than you can stay solvent. Okay, take a look at none other than the behavior of the markets in their low volatility period, essentially between the post-European debt crisis and before Trump in his first term, roughly 2013, 14, 15, 16, 17, 18. Okay, at the bottom of this screenshot, you can see a average true range, I think, of a one period. of the S&P from 2017, 2018. Anyone trading in that period, you'll remember how insanely compressed everything was. Volatility was dead. The all-time high was being taken in the S&P with utter regularity. And lo and behold, what dominated in that period was quantitative trading, the quantitative industry, because the world was reduced from a complex, dynamic environment to where only a few variables mattered. Because the central banks kill volatility through QE, through interest rates or negative interest rates, depending where you are. And there's no other real shocks to the financial system. So when you reduce all the variables to just a few, computation does win. But that's the beauty of a complex environment. It can trick you into thinking that things are static and rigid and rules based until shockingly you discover that you're dead tomorrow. Okay, there's a lot of analogies that the turkey, turkey and Thanksgiving, and so on and so forth. But the best way to visualize financial markets, the markets in the utter in their utter beauty, is this. It is the relativity lithograph by MC Escher or Escher, where we live in a very paradoxical environment where the present drives the future and the future drives the present. Us, by trying to answer the question of the markets, the very question changes. Okay, that can lead us down just so many other routes. I want to be very fast and efficient here. This is all intertwined, and I'll bring it back to this. But the whole point of this is for everyone to realize the utter importance of the necessity and the power of observation, unfiltered, pure observation on the closest, most important kernel of information in the financial markets, which is order flow, which you see on the price ladder, and so on and so forth. You need that observation ability because change in a complex environment is the only constant. Change will come, and you can stay ahead of change through observation, which we also argue is one of the main facets and one of the main powers of a human financial operator, not a machine-driven trading machine, and so on. So we bring this up in the Razor, chapter 2 in the book. The Razor, to speedrun the insanity of the Razor, he's an extremely consistent, uncanny consistent trader, huge trader, 8-figure trader. He is just known for like his utter insane patience for like the most abnormal, the most weird things to happen in the markets, where the normal natural functioning of the market clashes with abnormal rules. Okay, so for example, we talk about in the book, hit the limit down. So when the S&P enters limit down mode, him trading that in 2020, that's what I mean by the exchange has created an abnormal situation where all sorts of weird behaviors happen on the price ladder in the order flow. And he sort of strikes decisively with this kind of brutal aggression. So when people look at him, they might think, oh, he's a scalper, okay? Because he famously aims for basically taking one tick out of the market, right? Because people equate to these kind of things. That is false. That is not true, because he's someone who might go months and months and months of never taking a trade, and then boom, he drops 600 lots on something to take a tick, okay? Again, that's the Razor here. The most important thing to understand here, and this is what he talked about explicitly, is that so many people, and I can only agree, come in with this idea that they've been contaminated in the sense that they've taken someone's strategy and now they seek to apply that strategy as if one constant, now and forever, without them knowing, or thinking, assuming the markets are complicated like a car, and they try and just hit that strategy wherever they see, without thinking that there's change, that they've copied their strategy perhaps from an older environment that's no longer relevant, which means their pure observational ability has been contaminated. They only see the markets through that lens of that strategy. And it should not be the case, and I'll get to that in a minute, which means now they've confused the pattern and the strategy. They're now treating pattern as if it's something subjective. You often see some people getting into arguments on social media about the application of or how this pattern is supposed to be, but it's not the case, because if you have a pure observational ability, you'll see that there's specific market phenomena that happens regularly, which is basically a pattern, which is undeniable. Everyone can see it happen exactly the same way. Okay, so this is what happens when you have someone who's been contaminated through just being given a strategy and have corrupted or contaminated their sense of observation. Okay. Ideally, you'd be in this situation. You have your own powers of observation yourself, uh, that doesn't rely on anything else, observing pure price ladder order flow. That can then, through your observational ability, discover market phenomena or patterns, and then apply the subjective strategy, which is uniquely optimized for your everything, for your uh, the so-called trading personality. Again, that's an entire webinar by itself. I'm not going to go into this now. Again, it's a bit of an abused label. Your risk constraints, the risks you can or can't take depending where you are in your career, the kind of behaviors you exhibit, your skill constraints, career constraints, everything. Strategy is extremely, extremely, extremely subjective. That is applied onto an objective pattern that you've discovered through unfiltered observation. Pure and simple. When was the last time you just sat and just watched the price ladder or whatever mechanism to just look at the pure order flow for like 3 weeks? I'm telling you, you're going to get a lot further doing that than just, taking someone's strategy and be like, okay, I'm just going to slam this strategy onto the market every time I see it. Okay, again, so much to talk about here, but I'm just tying it all at a higher level together. The other problem, of having a sort of contaminated observation leads back to something else. It leads back to this very important skill set of trade sense. Trade sense is a product of your observational powers. And one thing we bring about in the book, everyone in the book, everyone on the trading floor, all the most successful traders, you'll notice they have not only keen sense of observation, but they believe in their observations entirely. Okay, uh, because and then that and trade in that way, observations lead to trade sense, which is basically a way of navigating markets. Specifically, trade sense is two things: having a sensitivity of opportunity. So, like, I know that something big might be happening on Friday. We're expecting some kind of comment announcement. Maybe there's a big play on the technical side. Probably that's going to happen Friday. So I'm not going to like drain myself by getting involved in the markets now, committing too much risk, too much energy, too much attention. I'm going to prepare myself for that. So that's the big picture sort of trade sensitivity, trade sense. Trade sense is also applied within within the actual trade. Okay, so like navigating the trade as it happens, as the Sphinx said, things construct themselves. And this is where we come back to why we're operating in a complex environment. Emergence is a feature of a complex environment. Emergence is also how you develop as a trader, and it's also how a trade in of itself comes together. You'll see how this all links within the webinar. This is what the Sphinx meant by things construct themselves. You observe some kind of market phenomena, you get involved in it, you're not entirely sure, but you can see that there's opportunity building in the markets. Suddenly some more information comes in the sense of a news headline. Suddenly there's a big order involved on the order book. Suddenly something else happens. You don't know these before ahead of time, but you're using your trade sense to navigate this all in real time. And then for you to realize, wait, the opportunity now is far better than it was 5 minutes ago. I'm going to add size. I'm going to or maybe I'm going to cut back because actually something adversely has happened. So again, things construct themselves, and that's also how traders evolve over 20 years. You can't predict by their very nature the skills you're going to learn in 20 years because otherwise you would learn them now, obviously. Or you may not have this understanding of the sensitivity of understanding all those skills than the smarter version or the more experienced version of yourself in 20 years. Okay, you construct organically your byproduct of this, and again, I'll mention this in a minute. So to be expressly clear, everyone, the way we were brought up on the floor, the way I see everyone trading now, what do you see on these pictures right here? Price ladder, price ladder, price ladder. Okay, order flow, however you want to tie it. Everyone expresses edge through this because it allows them to navigate and allows them to navigate the markets and observe emergent behaviors in the market. Okay. More importantly, how can we understand all these traders in the book or on the floor? When I mention the book, it's interchangeable with the floor. The floor has obviously way more traders, but at the time we captured just 10 specifically to not write a 3,000 page book or something. In one of the chapters, the hero, we used again, I'm not one for reductive labels, but just as a very quick and easy way to sort of frame people's edges. We created this spectrum of tacticians and strategists, meaning tactical traders are people who exploit opportunities provided by the market. So headlines, that's the kind of trader like the warrior, the godfather. They're expert navigators of news, of volatility injections given by news. The razor we just talked about, he is the kind of trader who will take advantage of anomalies that appear in the order book by just so many different reasons. But the market has to provide those. Strategic traders on the other end are traders who have created a huge puzzle piece of all the different skill sets they have to identify it, to access a subtle opportunity which is obvious to them, yet subtle enough to most other market participants. So when they engage in those opportunities, they've virtually created that strategic opportunity for themselves. There's a famous quote by Bobby Fischer, if anyone's familiar with Bobby Fischer in chess, um, that he said tactics flow from a superior position, and that's exactly what a more strategic trader like the hero said here, or like the engineer, who's the ultimate strategic trader. They have such a unique view of operating with a market profile and so many other things through an explicit framework of understanding markets that they see opportunities very few can. I'll give you an example. Back when I was trading and I was on the floor with the guys, even now, you can see how when the news guys are active, great. They're all engaged. They're all shouty. They're all yeah. It's a huge energetic environment. Let me put it this way. Uh, but it's kind of like flashing lights. You know, the news squawks are going crazy. Twitter feeds are going crazy. If you look at any chart, any price ladder, they're going crazy. Okay, Trump says something, everything goes crazy. That's obvious, right? And like the engineer once said, when everything is obvious like that, your ability to access that kind of trade it has to be so refined, so good. Your tactical ability to trade has to be so deep that a very few amounts of traders will be able to monetize that kind of obvious behavior. But what you'll notice is that on a specific day where seemingly is quiet, seemingly there's no opportunity, you would spot the engineer and the hero keeping their heads down, making absolutely no noise. Later, you find out that the engineer was long 1,000 bunds, and the bund was grinding up the entire day, trending, and everyone's scratching their head thinking, why is bund going up for like the entire day? Okay. So they've identified an amazing opportunity, like, this is like flashing lights moment, and they've created that through layering different things. And more importantly, as you guys have probably read on the slide, everyone starts out as, or rather you can infer it, that you have to start at this very micro tactical skill set. Everyone did this, everyone evolved. We'll talk about that in a minute. Um, to become a strategic trader. You can't jump the gun and become a strategic trader because the amount of adjacent skills needed to understand the overwhelming vast skill set you need to unlock that ability is very big. So you have to start as a tactical trader where you can only trade and basically monetize the opportunities given to you by the market before you are wide enough, shall we say, to take on the more subtle opportunities. Okay, so the hero here, why I've mentioned him, he's someone who started as a very, very tactical price ladder flow only kind of trader. He grew up under the warrior, and you can see he was a byproduct of that. What unlocked huge potential and ability, and for the hero to grow, is by attaching a strategic layer that came through the market profile, and then he had a very tight mentor-mentee relationship with the engineer who took the market profile to a whole other level. And as he said himself, when he's trading on the ladder, he couldn't really he basically admitted like he didn't have the tactical genius of the warrior or the razor, who are just such utterly good tacticians. Where, as I said, you can kidnap the warrior for 2 months. He doesn't know anything that's happened in the past 2 months. He hasn't looked at the markets. You throw him on the price ladders tomorrow, he'll probably make something out of it. He'll probably be up. He'll probably be up a good chunk, right? He just has this weird, uncanny ability to be to not know anything else. Of course, he is strategic too. He knows he's much deeper than that. But he said, by necessity, you will have to kind of be a combination of a tactical and strategic trader. And that's what happened in the Heroes evolution. And that just unlocked extreme growth, very, very big growth. Went from 3 to 300 lots very soon after, 800 lots. Then in the story you read about in the book, then he had a hero's journey of collapse, and then resurrection and so on. And that's a whole other thing. I have not mentioned at all for the speed everyone's life stories. It's all in the book, but either way, I'll speed up here just with an eye on the clock. Got about 30 minutes left, but essentially, Um, you know, tactical traders, like you see here on the left, uh, the Godfather, the warrior on the right, the engineer and the hero. Tactical traders are often more trying to exploit order flow anomalies, news. Strategic traders think more in terms of the profile framework. You will have noticed I have not used the word technical. The word technical and the word scalping are abused. It's a dead word. It doesn't mean anything anymore. It's not useful to think about that because you will then take someone's understanding of that and it'll put you on like a train. It'll put you like on a mind rail to only think in that way. Technical traders, let's use it now, or what you think are, fail because they don't have an explicit framework of understanding the markets through, let's say, a language, is what they quoting the engineer or the hero. The market profile is the language they happen to speak. They filter everything through the explicit framework of the market profile and then find opportunities in that way. Again, that's a whole other webinar. I'm moving on. And what I mean there by dynamic static, there's some traders who have an all in, all out approach. Some traders scale in, scale out, structured, unstructured. Some traders need to know the exact sequence of the exact, like the razor. He's someone who will be like, if you don't know everything from the beginning to the middle, to the beginning and the end of your trade, if you don't know about your sizing, if you don't know basically, if there's one stone unturned, it's a crime for you to trade. Whereas someone like the adventurer, who's the ultimate dynamic, unstructured, I have no idea what my edge is trader, is somehow always in the markets and always pulls out a very decent day. He's someone who has so much like basically talent who can just like the warrior. They're just such dynamic, unstructured traders who just kind of need to be thrown in and they'll just figure it out. Okay. As I said, things construct themselves. That's how you figure it out, just by being in, by being observational, and things construct themselves. Moving on. Number three, uh, pivoting slightly. I think it's very, very important. And I know I made this mistake, and this is why I want to bring it out very explicitly. I think a lot of people come in to no fault of your own, of course, but just you got to be made aware of this. Too many people come in thinking, operating, trying to be involved in the markets, trying to make money in the way you might go to the gym to just do random exercise. What I mean by that, that is not the way an athlete might go to the gym with a very, very specific goal, or an athlete training on the track, an athlete doing a certain set of exercises or modulating their training to achieve a certain goal. Because that athlete has a career, he wants to progress and enhance his athletic ability, skills, or whatever. Every time you might see an athlete in the gym, he's there for a very, very specific reason. Okay. Whereas other people approach trading as a way of like, yeah, I'm just going to do some exercise. I want to get my sweat on. I just want to get my heart rate up. I'm just going to do some cardio or whatever in the gym. Okay. The entire problem is that you don't have that luxury in trading. You have to have this idea where this is my career. How do I develop my career over the next 20 years? How do I then come in to build skills in that way? How do I then train myself with intention? That's what I mentioned here by periodization versus rocking up. When you train as an athlete, there's periodization. You plan, you modulate your training to get a specific reaction out of your body to take you to the next level versus rocking up, just showing up to the gym and be like, oh yeah, whatever, I'm just gonna do some whatever exercise. And this is what I alluded to at the beginning. This already existed all the time, but unfortunately, it's been made a bit more extreme by this obsession by people have by trying to beat the rules given to them by these firms that you pay for your funding, rather than just saying, okay, I want to develop my skills to navigate markets for the next 20 years and then monetize my ability to navigate markets. That's a completely different mentality. And this is what I always mean by thinking upstream. Like this, you're getting lost in the minutia here, as opposed to be thinking about the things that really matter. Okay, and the other thing I mean about trying to beat the rules and so on, this is all adjacent to this mentality of like, I want to solve markets. Someone has a secret formula. So I want to know the real strategy. I want to know, just give me something. I can't. I don't trust myself. I'm an emotional guy. I'm going to become an algorithmic trader, and that will solve because if I put into an algorithm, that algorithm has solved the markets and so on, right? So that's the difference between solving versus navigation. You can see how everything is sort of linked here. This is also something we've observed a lot, and we talk about it with the engineer. The engineer was the kind of person who really was a lighthouse in terms of professionalizing the industry. Okay, we can't generalize, but if you talk to a lot of people who grew up in the London proprietary trading scene, and what I mean by that, like the actual brick and mortar, a floor with 300 people back in like 2003, 4, 5, um, sometimes when you hear about these kind of behaviors that went on there, it seems crazy to a lot of people on the floor now because um like we joked about in the book, it kind of felt like it was a drinking team that kind of traded sometimes, as opposed to like, we're a trading team that occasionally maybe go out go out for drinks. Like there's this mentality where you're basically a professional athlete and you have to sacrifice everything. You have to sacrifice social life. You have to sacrifice, like, you have to live such a monastic life where, the engineer, he tracks all his biorhythms with different applications, the Aura ring, trying to really understand where he's at his best and just really look at this kind of like minutia. That doesn't mean you should be doing this now yourself. So you have much higher existential problems to deal with. But like this is how far he's taking the game. Like, and you can see that this has been this big professionalization since then. And the reason why that happened, something we talk about with the collector, this is the collector's experience. As someone who started in 2007, grew up on a particular floor, then went to London on another London floor. He witnessed the absolute death from a 150-man trading floor to literally 50, maybe less, within a year. That was the period when volatility died out because everyone was used to the high volatility. And I'm comparing the two periods we have right now. The high volatility stakes of 2007, 2008, 2009 global financial crisis, and then what followed with the European debt crisis. In that period, everyone was making money. Everyone was, the higher the volatility, the better for us as traders. And no one could imagine a low volatility regime was coming. But that regime came very, very, very quickly. 2017, 2012, 2013, 2014, 2015. Volatility absolutely died. And so a huge people who are used to that kind of old cycle, old environment, market environment, could not change and died with it. Okay. And what I mean there by the metagame of the prop industry was that there's always a metagame. Everyone will tell you, okay, this is what professional traders used to do. This is what professional traders do. But maybe what he's saying is that this is what professional traders did 20 years ago. And let me tell you, a lot of these professional traders would say, oh, no, you just got to wait for the markets to get good again. Meaning, I'm not going to change my skill set and learn new things. I'm just going to be doing the thing I grew up with, I made a huge amount of money on. And I'm just going to wait for the markets to get good again and just keep doing that. And then the markets never got good again for like, it never came back to the environment they always wanted it. Okay, what's the time? Okay, speeding up here a bit. Looking at trader maturation, athlete maturation, how do careers evolve? Okay, very importantly, you can't predict development. You can't look ahead and be like, I want to be like that trader, so I'm just going to copy him as he is right now. Something we mentioned about the athlete fallacy. You can't just copy what Roger Federer is doing and start training like him. How Roger Federer trained when he was day one, a beginner, is very, very different for how Roger Federer trained right now. Okay. Um, and you just don't know. You don't know your skill sets. You don't know your strengths or weaknesses. You have to go with what is immediately slightly beyond your pale and push that as a skill set you can learn. Basically, you have to push the boundaries of your skill set and just keep going on from there. And that's, we use this metaphor in the book, the adjacent possible. Like what's the thing you can unlock adjacently that you kind of understand with the skills that you have now, not something that's like so far beyond your understanding, okay? Because you won't be able to make that leap. We talk about how the student in the book, he was saying, look, I can see the future with me rests in news trading. That's my North Star. I know I want to go there, but I have no idea how to get from A to B. And he just incrementally, just by talking, discovering with traders, and just being consciously trying to find a way there, by being, things constructed themselves for him to get there slowly, incrementally. Okay. Um, what I mean there by emergence, that his skill set emerged, okay, because he picked up something we talk about in the book, spare parts. Spare parts is an analogy used by Stephen Johnson, how to have good ideas. Good ideas don't come from a eureka moment. They don't come from someone giving you that good idea. It's not a light bulb moment. It's a very slow, gradual accumulation of so many ideas from so many different places that suddenly you just connect them in a different way, and then you have a good idea, or that is the emergence of skills within a trader's career. You might have read this quote I recently wrote about in The Asymmetrist, Building the Future on How to Recruit as a Trading Firm. We talked about there about the nature of talent and how it incubates. It's always about pushing the boundaries of your known world. Extremely difficult, extremely fascinating. Fascinating. extremely frustrating, I wanted to say, also fascinating. And we see that I put here student, hero, warrior. Let me tell you, the warrior, our news trading savant, our 10-figure crazy news trading savant, he is he didn't just come in and be like, I want to be a news trader. There was no concept of like how he would think about being a news trader these days. He just came in and just said, oh, look, pure observation. For some reason, I don't know why, but when the S&P goes down, the bund goes up. Hang on a second. That's an interesting market phenomena. Okay, why don't I just think of a way of trading that? And then lo and behold, when the SPU went up, when I say SPU, the S&P, the bund went down. Oh, wait. Okay, let me try that. And he just incrementally moved from there. He only consciously started trading news like 2 or 3 years into his career. Okay. Again, but he wouldn't have been able to access that news trading ability without being such a refined price ladder um, operator and just understanding these. And without knowing it, he stumbled upon market correlations. Okay. The correlations between bonds and equity. That's the warrior, for example. The hero I mentioned with his the adjacent possible, by him understanding the market auction of how the market auctions up and down and understanding that intimately by seeing it every tick move up and down, he could then transplant that into the market profile because the market profile, in his exact words, said it's order flow on the longer time frame. So it was very easy that was on his beyond, slightly beyond his the pale. That was his adjacent possible. Okay, the student I've already kind of mentioned. I'm a bit pressed for time now, so I'll just keep going. Uh, Here's another thing, a very important thing, extremely important thing. This is the thing I suffered for a long, 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 long time. Everyone suffers through this. You cannot circumvent this. Learning versus performing. When you come in, you have to be a very, very good learner. Unfortunately, to be a very good performer is nearly the exact opposite: habits, traits, reflexes. I'll give you some. You can read now as we go. You probably read this in the book. When you're learning, you got to be sponging up and listening to everyone on the trading floor. When you're performing, you have to kind of filter out to only the extreme essentials. When you learn, you gotta learn and try everything. You gotta hit stuff. You just gotta get involved. Just keep picking spare parts up, man. Like you can't just say I'm not gonna get involved. But when you're performing, you are defined by the trades you do not take. Competency comes from restricting to yourself to what's proven competency. Okay, doesn't mean you shouldn't be learning. You're just iterating, right? You can read some of them here. I would like to mention something I might write about in the future on asymmetrist. Learning versus performing comes up in different ways. This is something I'm going to call for now immersion versus optimizing. A lot of people, again, not laying blame. It's a very natural reaction. I mean, I did this. This is why I'm mentioning it's a problem. People will come trying to optimize for something they haven't even learned yet. So think of it this way. They might uncover, they might tell them, okay, go ahead and journal. Great. They're very diligent, hard workers. They come back in 2 weeks and they've created an entire folder system full of, okay, this is my folder for the equities. This is my folder for this trade. This. And it's like, how do you even know what to make folders for if you've just started this, right? Like you've prejudiced yourself against the openness of just observing what's going on, right? Rather, but you would see that as a very like that should be the behavior of someone who's deep in performance mode and knows the game for years and years, right? When you're a learner, or when you're supposed to be immersed, all this kind of like optimization of like folder structure doesn't matter. Like even if you don't get what's going on, it doesn't matter. Just get involved, get immersed, just observe, right? So this is how I mean by learning and performance, but just cloaked in different ways. That's what I mean by folder versus emergence. Okay, let me move on very quickly. So. Um, Now, linking to the beginning of the thing, of the webinar, what has been implicit so far? Trading, I've talked about how trading should be always be thinking of career development, looking ahead of and understanding like you want to be in this for 20, 30 years. How does that look like for you? You want to be training yourself as a skill set, as a market and navigator, rather than looking for solutions. Um, because you can only navigate a complex environment, okay? Because a complex environment only changes, you need to navigate it. And then we're going back full circle because understanding the original sin of a trader is attempting to make an infinite process finite. All of your damnation, okay, as a trader comes from trying to be too reductive, trying to make too many folders, trying to have too many rules, too many indicators, too much stuff, too much stuff. Of course, you have to go through this. That's the point. You can't circumvent and achieve enlightenment on day one. But do you see what I mean? You've added too many layers of like junk abstraction between you and you yourself and the markets. If you're an infinite being, you could watch the infinity of the market at all times and trade it perfectly. You can't. That's impossible. So you have to reduce. You have to make the markets as finite as little, just so you can navigate them and no more. And that is every single trader defined in the book, every single trader defined on the floor who's succeeding and growing. And in turn, I assume that's true for a lot of traders, not necessarily in the outright futures trading space. Um, okay, just looking at the time. Okay. Um, so moving on to the metagame and market evolution. So you might be thinking, what the hell is this guy talking about all the time? Like, where's the strategies? Where's the specifics? Where's the whatever? You have to really understand what's happening here is that and you know, like for a long time we were always asking ourselves what's the difference between so-called retail and so-called professional, or like, you know, at a prop firm. And when I say prop firm, a brick and mortar prop firm of the way I defined it earlier, is that it's always having this meta layer of always looking at yourself, looking at the markets, and trying to cast this recursive ability to always constantly just reanalyze yourself. Because, you know, again, just from observation, a lot of retail traders just be trying to apply this strategy that's just trying to rock up to the markets like as a way of exercise, just come in, fail, come in, fail. And there's never a change in behavior. There's never a change of working up towards a career of developing a skill set. And that's a very, very key difference. And I'm only saying, I'm quoting the engineer who said about these things. You know, people just think more meta, just always reflecting on what they're doing. Um, but it's also thinking about meta, about how the markets evolve. The markets evolve drastically. Uh, a very little case in point. Everyone, I assume, has recently seen what I said here about Iran 1.0 versus 2.0. The Iran-Israel-US conflict of the past 2 weeks. They echoed a lot Iran 1.0 being in January 2020. The US killed Iranian General Soleimani through an airstrike that caused huge risk off in the markets, meaning equity down, bonds up, safe havens up, oil up on the implication of supply shock. Then we had a very choreographed de-escalation. Okay. Um, we had an echo of that in the past 2 weeks, except the reaction was very, very muted, like shockingly muted. Okay, we had bigger reaction in the energy complex, in the oils and their products and their derivatives, cool. But relatively speaking, the reaction in the equity and the bonds and the gold, especially the bonds, was basically compared to 1.0, like very contained. Okay. So that's a very specific example. I talked about the high and the low volatility examples between 2016 volatility was dead. Now we have high volatility. At one point, low volatility will come back. You should be prepared for that. When low volatility comes back, I cannot tell you, because if I could tell you, that is $1 trillion fund in the making. No one knows. Okay, no AI, no human will tell you when low volatility is coming. It's unknown, but it will come. That's for sure. So you have to be prepared. What the markets look like, the order book look like, the behavior of the order book look like in 2008, 9, 10, very different to today. You have many traders who've come back since the glory days of then in the past few years, who are shocked how different markets are. And as one of the traders said, an amazing up and coming trader who wasn't at Axia when we made the book, but maybe in another piece we can capture him, who said, on a day-to-day basis, if you're there, you don't notice all these micro changes, but the rate of change, as the Godfather said, who's in the book, the rate of change is so aggressive these days, from one day to the next, more than ever before, as you've seen in his 20-year career, that just missing a few weeks is enough to just lose track of what's going on. Okay, there's always constant change. You might not notice it day to day, and your brain's like adjusting to it, but they do. And you may not appreciate this. You know, if you read a book from 2005 and that book is telling you, oh, this is what professional traders do, you could be reading the metagame about something that they did 20 years ago. For example, the big popular metagame at the time was that all the professional traders, quote unquote, are spread traders. They spread through products, okay? But that's the complete opposite now. All the spread traders either ended their careers or became outright futures traders. Of course, they're spread traders these days, of course. But that's the way the metagame, the skill metagame of this career has evolved. Okay. So that's outdated metagame that you can still think, oh, this is what professional traders do. Okay. It's always changing. Um, and here's another thing. As the Godfather said, in 2005, you could identify yourself. People will always ask you, what market do you trade? You identify yourself. I'm a guild trader. I'm a FTSE trader. I'm a Bund trader. I'm a Treasury Euro dollar trader. Now, no more. Everyone now is more like, thematic, like a news trader, but that's a bit of a reductive phrase. And you're hitting any market where there's news. You're chasing volatility, um, or this framework market profile navigator. I'm trying to not use the word technical here for reasons which I explained earlier. Uh, how are we for time? Okay, so I'll land the plane very shortly. Um, and it's very interesting. And this is what the book was sort of built upon. And what is very implicit to us as water is to fish at the firm, but and that's what culture is, right? Like you don't realize the importance of culture until you step outside it. That's why you get reverse culture shock when you travel for some period of time. But when you step outside, you think what is actually very consistent patterns as opposed to, looking for the consistent market pattern is at a meta level, all the things that happen, the forces that make or break your career. And I'll give you some very important that you have to understand. Social learning in isolation never goes well. A trader who does suddenly well, who grows up in a community, whether remote, whether on the floor, but is born into like, leaning on other people. That's what we term the extended mind, something we use in the book we borrowed from Anne Murphy Pull. Um, all traders who suddenly have good success, they're like, yeah, you know what? I want to move to a tax-free regime. I want to live close to the beach, whatever. See you guys. Um, you never hear from them again a lot of the time because then they're shut off from the extended mind and the collective learning of the trading floor. I mentioned here something called the resource dilemma, another one of trading's great paradoxes and unfortunate contradictions, which is as follows. Too little time and too little money to give yourself to learn and to evolve your skill set as a trader is just as bad as having too much time and too much money. Because if you have too much time and too much money, you're never forced to go through the brutal, unsexy parts of this game to have the stamina to really, really, really make it. Quite simply, no plan B. I'll give you an example, a story. There was this very big trader who was huge and basically godlike to the eyes of uh, the top traders now when they were young, who retired through success, just made enough, I'm done, and came back to the markets only a few months ago to trade all this volatility with Trump. And he not only said, markets are so different, I have no idea how to trade these markets. He was like, man, I've got to sit here like, what, 16 hours waiting on this guy, Trump? I don't want to do that. And he was thinking in his head, why would I do that? I already have so much money. Like, I'm not going to put myself through this, right? There you go. Strengths into weaknesses. The markets will always turn strengths into weaknesses. It's not something that's often talked about because it's a concern further down your career. But at every part of your career, there's a lot of psychological traps, career traps, where financial success we talked about with the adventurer weakens you because a trader who's up and coming, who has put in the time and the effort and sacrifice so much, and is now really growing, really pushing. That's the trader you do not ever want to fade. That trader is hungry. He's pushing. He's growing. He's here to get his pound of flesh from the markets. Okay, the trader who is now made enough, who's taking some time off, who's whatever. He's not as sharp. He can continue that because he has so much skill and talent that's been built up and carrying him forwards. That trader is slowly, slowly weakening and weakening and weakening. And at one point, he might say, well, like the adventurer said, I'm basically here just because I can extract money consistently. But like that's it, right? Like I no longer love this game. I'm just here because I can do it, however long it lasts. I don't want to go any further. Okay, which is very, 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 very rare luxury to be in. But that's the reality. And again, if you step outside of yourself, if you think upstream in a meta level, uh, you can recognize all these traps and deal with them. They matter far more than some transient issue with some kind of what indicator should I use or something. Like in the end, these are the things that matter. Okay, so of course the more in the detail questions matter too. You can't circumvent, but like you gotta answer these first before anything else. So again, hopefully that all makes sense. Now, as we start slowly landing the plane before we get into Q&A, if you're unfamiliar with the book and you want to get a taster of all these traders, of all the stories, of the crazy way Axia was made on one morning on Brexit night, Chapter 1 is available for free on tradersofourtime.com. It's a website dedicated to the book. This website will keep adding it with a lot of resources and so on. But if you want to get, so if you want to stay in the loop with that evolution, but more importantly, if you want to get Chapter 1 for free, tradersofourtime.com, you can sign up, email, name, and I can only recommend to you as well that by ticking that box, you can also be looped into a lot of like Axia educational content, special offers that might come in the future, and I can only recommend it. Why? All the stuff that goes into that comes from the trading floor upstairs, quite literally, and gets trained on all the trader, gets shown. All the traders come through that educational program and so on. So. Thank you very much. I think I've landed the plane 4 minutes ahead of time, roughly. So I'm very, very, very happy to do Q&A. Bruce, if you are happy to, I'll also look now through some of the questions. But I hope, Bruce, that was good timing on my part as
Uh,
well.
Bogdan, it was excellent, extremely insightful, and really great to get a peek into some of the things you've been exposed to on the trading floor and your experience with not only your own experience, but your experience side by side with some of these traders. So
Thank you
really,
very much.
really,
Yeah.
really great. Yeah, we got a few questions here, and guys, get your questions in, and we'll go through them. And just starting off with one trader here says, uh, do you think time is the matrix put before the retail trader's eyes to hide what is truly happening in markets? It's a really kind of interesting question. So,
Oh, wow. Yeah. Very interesting question. Time. Could you repeat that again, Bruce? Sorry.
do you think that time is the matrix
Mm-hmm.
put before the retail trader's eyes to hide what is truly happening in markets?
Very good, great question. I assume this is also related to time in the sense of this person asking stumbled upon an internally deep question, the nature of time and how that affects markets. It's actually a hugely deep question. I can assume they mean time in the sense of looking at like candlesticks based, like 1 minute, 2 minutes, 3 minutes, and this kind of case.
I, I
Um,
I think what he if I can paraphrase here, I'm hoping I get it right here, is like you're talking about ecosystems or complex versus complicated,
yeah,
and a lot of times we just have to sit around as something kind of builds up,
yeah,
and then all of a sudden it breaks.
yeah. Time is, I think, one of the last frontiers of where mastery is, because the hero actually mentioned this in the book. He was saying, we asked him like this and that market profile, and he was like, what are you still struggling with? And he was like, how time works to validate and invalidate trades. And more implicitly, again, just thinking about so many conversations I had with the guys all over b before and after the book, now the symmetrist, completely how things have to gestate, how things have to come together, how things have to construct themselves. Um, More importantly, um, something as well, like to make it a bit more explicit, like, the collector who was sitting next to the warrior, the engineer and the hero, market profile based. I'll use the word now, technical traders, but I hate that term. Uh, he was looking, man, these guys prepare a series for a some kind of an unwind in the bunds based on profile or something, as serious as we prepare for a central bank event, the FOMC or whatever, like a week ahead. And they know like they've been watching how market positioning has been evolving, changing. They've been watching how order flow has been evolving, changing. Again, they're looking at first principles data, shall we say, and they're biding their time to understand, like, okay, the market's shifting, shifting, shifting. Where is there maximum asymmetry in the market for things to shift so well into our favor? And then they act, and then they act by then navigating in real time through their, trade sense, through the way they trade, through the price ladder, and so on. So in that case, time is crucially important. I think everyone thinks about time, and to shortcut perhaps what a person may have been asking, I don't think there's because I know there's this bit of a war about time-based shorts or not. I think in the end you have to use with what makes sense to you intuitively. Don't let someone else give you that and just take it off the cuff. But I would say everyone's constantly thinking about time, just like in news trades. Some traders, for example, if you want to refine news trading, there's some traders here who will be smash and grab traders, meaning, boom, get in on the headline. If it doesn't go for a certain, if the market doesn't move for X amount of time, they're out. They don't question it. So time was a filter, no matter how significant the headline is. Okay. If there are other traders like the warrior, who's kind of like, I use this phrase, if one person's a smash and grab, he's kind of like a bite and hold. Like he'll just get in and like a bulldog will just grab onto that bone and just fight to the death and try and get out. Like when it's clearly over, he'll just constantly just cut, add, dynamically manage his position. And he's always constantly thinking in his like Rubik's Cube of his brain, how we've spent so long after this headline. Why is there no other headline? Why hasn't anyone followed up with this? Time was very important with real-time situations, with trading all those geopolitical things. Like, oh, the market's moving on this, like something's happened, but where's all the headlines? That also creates another tactical situation. So time is crucial. It's everything. It's one of the ways we. It's Okay, I want to talk about paradoxes and some more philosophical stuff here, Bruce, but I don't want to go on a tangent now. That's kind of in the book, so you can read about it more. Happy to discuss it further some other time if of interest. But should we move to another question, Bruce? So I just
Yeah,
re-answer
yeah.
some
I
of
mean,
them.
that sounds like it could be a whole webinar in itself.
Yeah,
So,
I'll write about it. It's one of the things I'm digesting as well. So yeah, I'll
okay.
write about it in the future.
Laura is asking you, well, first off, thank you for your great work in being here. We were all looking very forward to this. You wrote about the importance of the trading floor and speaking with successful traders. She
Yes.
thinks that most trade at home alone. And then, what do you think about a trading floor? How can it be replaced by our like online community here at our Bookmap Academy? We have a kind of like a virtual trading floor here, or a trading group called the Bookmap Academy.
I,
Um,
I think in terms of understanding how training education with traders works from anywhere, it's you need to get the Lego pieces from somewhere. You now need to make so many mistakes building those Lego pieces from somewhere. It's kind of like you have to construct the Lego pieces yourself, and then all of a sudden, I know this is a strange metaphor, but go with me here because I think you know what I mean. And how you do that is obviously, and the more unique you do that, that's you as a trader. The more unique you can do that, so improves your trading career. But I think community and like training and education is obviously very much linked, but they're a bit separate in the sense of you have the Lego pieces you get the spare parts like we talked about in the book. You're constantly trying to make sure you're learning, you're adapting, you're seeing what's new, what's not new. Do you reject it? Do you accept it? The problem is you got to develop your own filter of what you accept and reject, and that's very, very difficult because you can easily get hijacked when you're a new trader of understanding what's significant and what's not. Unfortunately, you only get that filter by just constantly um, evolving. However, what might be not useful now or may not appreciate now could be very well be the something immensely useful in the future. In terms of community, I think it's very difficult because you see here, you basically, yes, you should be building community, and even more so, you should drill down and really start to build people that you resonate with and that you start seeing the markets in the same way you do. It doesn't mean you should form an echo chamber, but you should be forming your team of just people on your like horizontal. I've often mentioned to Alex when you have your horizontal learning, meaning like people in the game with you. You're all trying to learn, you're all trying to figure it out. That has huge value as well. Because when you speak to a trader who's like 20 years experienced, you ask them, or like an athlete, it's like, oh, can you teach me how to kick a ball? And they're like, what do you mean kick a ball? Just kick the ball. And obviously, because they're so ingrained on how to kick the ball, for them it's easy, right? It's the same for traders. It's like, okay, show me how I can trade this. It's like, I don't know. The headline comes out, you just buy it. Like they're talking to you in a way like, what's so hard about it? But obviously it's extremely difficult and there's a lot of processes involved. Um, So having that horizontal team is very, very important. That takes a long time to develop. And I just think in the remote space there is a more of a unique opportunity because you have the exposure of just so many people. So it is important to be involved in whatever community like Bookmap that has so many people because the rate of you encountering someone who's gonna you link with that you can learn and expose yourself to is that much higher. But to make that explicit filter and explicit, I want to build people to like kind of like a team-based thinking. Um, that's sort of like on you. But you got to get the Lego pieces and the spare parts from wherever and people as well. I hope that answered it well, Bruce.
Okay. Um, let's move on to Xavier's question here. Was asking about can you elaborate on learner versus performer in relationship to immersion?
Oh, perfect. Yes, I see there's another person here who asked something about learning and performing. So I will very quickly just go to the slide just while I explain it. Hopefully, yeah. So while I explain this, so the person asked learner versus perform in relation to immersion. Uh, Immersion versus optimizing, probably you meant. Sorry, just because you can approach this problem in different ways. So when you're in a new skill, whatever it is, and hopefully I don't have to convince everyone now that trading is very much a skill. It's not something you try your hand, you make money, you don't, you walk away. If you make money, great. Okay, so trading is a skill. Trading is a creative act. Again, huge topic. Um, and like anything, you don't know what you don't know. By definition, you don't know that. You can't predict what you don't know. And often by trying to predict and fundamentally by evolving into an extremely unique and extremely like by definition, by the more unique you are, the more success you have as a trader, you have to be a very innovative product. You are an innovative product. By trying to predict that innovation, you're prejudiced. You're being prejudiced against your own. You're prejudicing creativity. A fantastic way to prejudice creativity is by setting up rails in the form of, for example, sometimes this is one very tiny example, but it's just an obvious example of how people might, just come in and start making an entire database of how, this is this pattern, I'm going to start, and then slowly start thinking that way. You don't want to be thinking that way. You want to have complete immersion where you don't assume anything, especially when you're a pure learner, you just come in, you don't know anything. You want to have that beginner's mindset. You come in, you don't assume anything. You just sit in front of a ladder, sit in front of watching order flow, however you can do it, and you just watch. You're immersed. You sit there for hours, 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 hours. You watch different market phenomena play out. The best way I can answer this, Xavier, um, imagine you're on an alien world and you're a marine biologist. I think maybe someone's heard this metaphor from me before. You're a marine or you're a biologist on an alien world. No one's been to this alien world before. You don't want to make assumptions, and you're just there to observe. You're there immersed in that world, watching every single day to watch the behaviors of the animal, the alien fauna and behaviors. Because you might be thinking, oh, look, that's not a nocturnal species. I'm not gonna stay up and watch them do their thing at night. No, you can't assume that, right? Like you got to be there and just watch, and then slowly you'll be developing your awareness of different market phenomena and how they develop. And that's the importance of immersion as a beginner. But even immersion as any given day, every trader, every successful trader, whatever part of their career skill achievement, it's all about immersion during the day, not being disrupted in your flow, in your focus, immersion, and then you slowly see how things construct themselves and so on. I hope that makes sense again. And if I can just scroll down, number 6, I wanted to note about engage in learning. Sorry, Xavier, I don't know what you mean about your second question. I wanted to note that the side most learning trader. Yes, your second question, if you don't mind just reformulating it, and I can come back. Um, Bruce, is there any other questions you want to pick up or?
Yeah, there's another question here about buy sell delta. Is it equivalent to
Hmm.
dimension of intent? And Yeah, really appreciates your book and finds it riveting here. He asks here about the delta and dimension of intent
Hmm.
because we look at so many different applications of delta on our chart.
No, 100%. Basically, yes. Basically, yes. With many, many caveats. Caveat one being, even then, if you have a measurement of intent, and let's say you summarize, let's say you're equating intent with delta, that the way that can be represented can also evolve over time. Sometimes you might have delta being super wacky because so many different reasons. So even there, when you're observing it, you don't want to be prejudiced necessarily to thinking delta can only act in a certain way. You have to sort of adapt with the data that you're seeing, if that makes sense. Um, I'll answer it another way. Uh, some traders on the trading floor, very successful guys, look at delta. Some people like look have it up. Some people refer to it from time to time as the hero when I asked him on these specific tools, like the footprint or delta or so on. It's like, well, sometimes it just helps to have just one just objective key metric to help you from getting crisscrossed between like just watching the ladder constantly or order flow. Some people don't have it, but again, they may not have it because they are never exposed to it. They don't have it because maybe they tried it out and just thought, for me, how I see the markets and trade it, it's I don't need it. In their case, I can't answer for them. But all I can say is, yes, it can be a dimension of intent. It can be also a bit tricky sometimes in understanding intent in that way. And hopefully, it can also answer that some people are trying to monitor that through intent, also through buy sell delta. So hopefully, if they're watching it, that you can also infer that it is of use to them and therefore useful in that case. If again, if that makes sense.
Yeah, yeah, no, sounds good. Let's see, Xavier got back in. Maybe just if you can flip to slide number four, or I mean number six.
Sure. Do you mean the very
Or
sixth slide
no, no,
or
number
point
four,
six?
point six. Yeah.
Yes, which I believe was here. Would there be any questions in Discord, Bruce, as well?
No, we're
Or
exclusively here in
okay, okay.
yeah. But I'm sure there's going to be a lot of follow-up questions.
Yeah, yeah, and I'm very happy to handle those, however, so send them my way, or perhaps on another session we can do it.
Okay.
Uh,
Let's see. I'm not sure exactly what Xavier was talking about here, but he's
I'll
the
leave it up in case. Yeah,
performing prior to learning. So yeah, I doesn't ring a bell for me from what you talked about. Yeah, I think we need a little bit more
yeah.
background on that one. Anyway, another question here about well, it's kind of specific here, but this trader is trading stock indexes and micros, and looking at the price ladder in the DOM, also in Bookmap, and asking about other financial instruments that maybe he can train his eye on
Yes,
for
yes.
correlations and how they kind of complement each other.
100%, and very good question indeed. Um, I would actually say the equities, not always. Again, things change all the time. Correlations always change. And they come and go, positively, very strongly correlated to weekly. I would actually say that the equities are more dominated by many other asset classes than they are than the other way around. So the equities at certain points in time might be dominated by activity in the stirs and fixed income, what the yield curve is doing. There's a brief the relationships, for example, sometimes when in the yield curve that affects Nasdaq. A few years ago, sometimes it comes back in, sometimes it doesn't. It's more important to be aware of these relationships. So I just want to caveat that to not look at it like, or for example, I'll give you two answers. Look at what the theme is. So with Iran, Israel, US, the main lead was oil. So in this case, you might want to just pull up your oil and just see how the oil is just leading everything else. Of course, reactions were so muted cross asset that, if you're looking at oil trying to trade the bonds, that was basically useless. But there are these relationships, and there are fundamental economic relationships you can't ignore. It just depends at what moment in time the market cares about. So you can talk about it all the time. The most classic is risk on or risk off. So on a risk on situation, on a risk off situation, equities are sold, safe havens, bonds, gold, the yen sometimes is bid. So sometimes you might see an early bid come in gold and yen. Uh, and or like for example, you'll notice that the market will in some markets it lags. Like you might find a very big move in the other, but another market has lagged, so there's opportunity there. I'll give you a concrete example. In the most recent piece I've written in the Asymmetrist, I was interviewing, funnily enough, the godfather from the book who's just traded this whole Iran-Israel thing. He found a lot of opportunity trading the gold because it was the most lagging market out of the equities and the oil. So what a lot of what a lot of the Axia team are doing, this is when it gets really complicated. 1 + 1 = 3 thinking. They were selling oil and buying equity and selling gold when you had so-called bad headlines of Iran sending missiles towards the end of the theme, because basically it was becoming more and more obvious that there's now a choreographed way out for Iran to retaliate. Cool, they just blow up something in the middle of nowhere. It has no material impact on anything. They can say they've retaliated. They can now. Even Trump came out thanking the Iranians for giving a heads up about it. Obviously, it's all like a landing ground to just de-escalate. So the markets, everyone was front running de-escalation. So when then you had confirmation that okay, they just sent some missiles, they didn't blow up like a gigantic U.S. airbase, and now the U.S. is going to be forced to respond. It's managed, it's choreographed. Okay, this means confirmation, de-escalation. Boom. You now have the flow, the insane offering in the oil and the crude oil Brent WTI. Then all of a sudden the equities get bid, risk on, and then a lot of guys noticed the gold was bid because it's a safe haven. Now it's going to be then there's opportunity to sell it because it's just so high up. It had no business being that high up in relation to everything else, and so there's that relationship. To answer one last bullet answer is basically just pick to not overload. Pick one market of an asset class. So pick a bond or a note or an interest rate product essentially. Pick a currency, pick an equity, and pick a commodity product. And often you'll see if things happen randomly in the future, you can see the effects ripple across different markets, different asset classes, if that makes sense.
Yeah. Laura's back with another question. If you can
Yes.
briefly explain what you
hmm
mean by hard edge versus soft edge.
Oh, indeed. Yes. So basically, a hard edge is the skill deficiency. Is basically soft edge is what you can push when there's very little that can be pushed further in terms of learning. So when you're new, there's a huge skill deficiency gap. You just need to build a hard edge where you can monetize, you can reliably monetize. It's just skill. Soft edge is more about the pushing these things like being very, very nuanced. Like I said, like the engineer, he's very, very nuanced to his behavioral patterns when he has a three rounds of bad sleep and he's monitoring that and he monitors his heart rate and all these things. It's like that stuff doesn't matter if you don't have hard monetizable edge. But when you're trying to push any kind of little tiny advantage to the nth degree, it all comes back to soft edge. Like I wrote once in the Asymmetrist that, when all else is maximized, when hard edge is maximized, when you've maximized everything there is to maximize, probably the next barrier for traders to push is recovery in the way athletes recover. How do you recover after you stayed up for 3 nights in a row, nearly 72 hours? Because the person that can recover from that and get back to the floor and be fresh is going to have an advantage over someone who can't. How can you recover from some social activity? How can you recover from just other things happening in your life? Like that's soft edge basically. But soft edge is kind of like a play on words that often is could be even more important depending where you are in your career. That is to say, hard edge is very important at the beginning of your career, and soft edge is very important later in your career. But often, unfortunately, I think too many people try and fall into the soft edge trap where they come in, they take someone else's strategy, they're not immersed, they get beaten up by the market a bit, they're not really thinking of developing skills as an athlete for the next 20 years. This is going to be hard. And then they suddenly go, okay, maybe my psychology it doesn't work. And then, there's a whole world out there for trading psychology. And then they're more concerned about these soft edges, how I recover. And they're kind of conflating priorities. So I hope that's given a quick answer to hard edge, soft edge.
Yeah, absolutely. Let's see. Xavier is asking about if you can elaborate on strengths, turning strengths
Oh,
into weaknesses, like the adventurer.
uh, perfect. Sorry, Xavier. Sorry for misunderstanding. Oh, I see what you mean by point four and six. Okay, okay. Strengths into weaknesses. Yeah. Uh, yeah, very simply, and you can observe this many, many ways. The markets will always turn strengths into weaknesses. Always. I'll just give you random examples. You get to a certain trading size, often you'll have to change how you trade because of the um like even for people at our little small like relatively small size to the gigantic size like bigger players institutions have. I mean, realistically, if you're like the warrior, he even said himself, like, if you're going to be lifting, you know, 500 lots there, 600 lots there, 700 lots there, you can easily eat the next few prices, right? Uh, when you get in, when you get out, you start like splaying yourself all over the place. You're going to have to start some things he used to do um, as a junior no longer is viable, right? So his strength of sizing, of increasing his skill set, monetizing that, increasing account, increasing size, has now become a weakness. He has to adapt. One example. Strengths into weaknesses can also be, as I said, like financial success. Unfortunately, it's true with many things, not just with trading. Makes you less hungry, less committed. That has huge knock-on effects, not tomorrow, but it has knock-on effects 12 months from now, 24 months from now. Um, yeah, just a general observation. I hope people can agree with me here. Like you probably noticed it yourself. It's the great battles everyone has. Strengths into weaknesses. I'll give you a random example. When you scale the trading floor from 6 people, is very, very different when you have a trading operation with 100 people. All of a sudden, there's people who trade in different ways, have different mentalities that are not part of um, like have clashing mentalities, philosophies. Suddenly, you go from managing a tribe to trying to manage an entire group of people. Um, Strengths into weaknesses, right? Scaling becomes difficult. Yeah, the list is endless, but that's what I meant by, one particular example, the adventurer. He just he was very obsessive and loved the game, but he just reached a point where it's like, look, I have enough. I kind of want to keep going. There's other things in life, but he's just here just to trade as a means to an end rather than trade because he just loves the game, if that makes sense.
Yeah, yeah. I actually had a question for you, Bogdan, and uh, to what you're describing as this, complexity
Hmm.
and or the complicated environment and many different things happening, and then trying to become an expert and understand uh, the environment well, and then find your niche,
Hmm.
basically. I mean, because it sounds almost kind of uh, uh, kind of negative, like, wow, it's so complex, I'm never going to figure it out.
Mm.
Why would I even get involved?
Mm.
Type of thing. Uh, however, like, these traders find an edge. And like you said, there can be a hard edge to kind of begin with, and then it evolves into this softer edge. But even with that, like, we're just kind of float little ping pong balls floating
Hmm.
on the ocean and getting knocked around. And I'm wondering, like, I mean, I would imagine it really comes down to even these traders get on the wrong side, uh,
Hmm.
and it must be just the coming down to risk and
Hmm.
taking the losses, taking the small losses, taking the small losses. But then when that one trade works out, they just have massive gains.
Hmm. Well, look, in terms of being wrong a lot, 100%, often. I mean, again, depends what kind of trader you're talking about, because the ones that are like dynamic, let me just get involved a lot. They're kind of like, um, how do we put it in the book? Like, someone like the Razor, who is very precise and is right a lot, but he's more of an exception. He's like, um, I understand the journey. I know the destination, so the journey will take care of itself. But a dynamic trader is the opposite. It's like, I'll figure out. I'll figure out in the journey, and the destination takes care of itself. If that makes sense. But you're right. Like on the whole of it, it's just the ability to be highly dynamic and just adapt to what's going on. And yeah, adapt risk. Uh, Cut positions, get involved, double down, take a loss, get involved again, so on and so forth. But Bruce, this is actually a fantastic question. I love you mentioned this because it gives me the opportunity to talk about this. When discussing complex environment, like, as I said, a rainforest, interestingly enough, the rainforest is one of the most biodiverse ecosystems because of how complex it is. I remember reading about when I was reading about complexity itself, they mentioned how there's all these wacky species of plants and insects that basically are a derivative. They exist only because a certain other plant exists because there's another certain plant that exists, right? And so there's basically the more complex and the more nuanced the ecosystem is, the more it actually permits for a niche or niche to exist, actually. So, and this is very interesting because when volatility is high and markets are dynamic, they're fluid, they're healthy, they auction up and down in a very healthy way. They move around. The world is very variable, and they're trying to constantly digest what's going on in the world. And that's basically the equivalent of our rainforest ecosystem. Actually, you'll get so many niches in the most unlikely weird places for every kind of trading. It's fantastic. What sucks is when the volatility dies out and our rainforest goes into a dry desert land. And actually, the market turns from complex into more like temporary complicated because the amount of variables that can affect that world is now very, very specific because there's only so many things, because the volatility is dead and rates are dead and everything. There's only a few things that can move those markets, right? As we've seen in between 2013, 14, 15, and before 2020. Uh, so actually, the dry, difficult times are it's when it gets really, really scary and difficult because that just requires such an insane patience. It requires you to be right more. It requires you to maximize probably one opportunity a month, which was the kind of trading that was going on then. Which is why the engineer was such a powerful trader because that's the environment he grew up in. That's like, um, but now we moved into a very more complex ecosystem where, we kind of moved back to a lush rainforest because volatility is so high. It does permit niches or a niche. Don't know how you pronounce the word specifically. But yeah, hopefully that answers your question. Basically, I'm pinning an optimistic note to that, and I also want to mention. Unfortunately, I'm sticking to these two words, complex and complicated. Unfortunately, because complexity science, which is kind of the understanding of complexity and looking at complex systems, has only existed like come into prominence since like the 1950s. And they've always stuck to the word complex. So if people want to go off and they search complex systems, they can read more about it. But I agree, this word complex and complicated, I just wish they chose another word because it's easy to confuse the two, and it sounds a bit scary sometimes and stuff. But yeah,
Well,
it's just understanding the environment, right?
yeah. No, it's really great to hear about these niches that can develop, and
Yeah.
then traders are in tune to them,
Yes.
and they're aware of them, and then they kind of figure them out, and then they make an edge out of it, and it's incredible. The a lot of traders, like, we see come into the market, look at this like they have in other things, like maybe in the academic world or in their careers, of like, oh, it's binary. It's a math
Hmm.
problem. It's like, oh, if I do
Yes.
this, this, and
Yeah.
this, I get that, that, and that. And it just doesn't work like that. It is, you can see like just in the price action today that something starts to develop, something kind of new. It turns into something bigger, and then that drives the market. And what looked like something fantastic earlier is now completely upside down. And so, yeah, I think it's a great analogy. And just what would you recommend to traders out there, how to get started and be more in tune with that?
Yeah, again, fantastic points all around. And just to touch on, since you mentioned academia, 100%, it is because some not necessarily academia at university level when you're on the fringes and you're doing R&D and all these things, but at least the school system as you're being brought up is the very definition of you're given a artificial complicated environment because there is one solution. And you're taught to give a one solution answer to everything. And unfortunately, we know well now the knock-on effects of this, of how that doesn't square up with real life and moving through real life once you come out of school. And but we also have this because so much of mainstream finance has been followed in the way of how mainstream economics has developed in the past, in the 20th century, how so much understanding in these domains have been moved from, like economics, for example, 100 years ago, used to be much more philosophical. It's become now mathematized, rigor and logic added to it to somehow make it seem more like a legit social science, right? And it's the same process in finance where you have this move towards understanding it as providing a one answer way to build, you know, the efficient frontier in portfolio construction, understanding portfolio construction, and there's a formula to do that. And all of a sudden, you're thinking quite rigidly around these things. Okay, that means there's one thing. Okay, we need to take the risk-free rate. What's the risk-free rate? Okay, and it's like you're given the answers there, and it makes you then come into trading thinking, okay, that's how they think, that's how mainstream finance thinks, that's how mainstream economics thinks, and you're trying to find the answer in trading as well, which cannot be. And it's just crazy because you think, well, how is there such a disconnect between the two? But that's how it is for whatever way. And lastly, Bruce, to answer that question about what traders should do to be in tune. Again, fantastic question. Uh, I can say if you want to go kind of cold turkey, is just to very, very much just understand how much of your observation of the market has been, I know these are kind of aggressive words, but like contaminated by looking through a specific lens of someone giving you a strategy, for example. That I say that will apply to a vast majority of people. That won't apply to everyone. And this is the problem with advice in trading because it's so contextual, that it's so nuanced that it can only be of use to that one person. And even then, they kind of have to then figure it out by themselves, if that makes sense. And it's difficult, but like, again, do not underestimate your observational ability. It's what the human trader does best. This is the thing we explored a lot in chapter 2 of The Warrior. If people have got the book and maybe they haven't reached that part yet, we looked a lot at AI and algorithms because algorithms has been the bogeyman of trading since like way before AI has been the bogeyman for everyone, or so-called AI. Uh, and we talked about that because we're understanding, okay, what does algorithms and AI do really, really well? That will then identify what they can't do, what the human can do really, really well, and then we'll just double down on what the human does really, really well. And the human does what it does really well is to observe exceptional information, handle that exceptional information by going with your best guess, and adapting to that exceptional information, aka trade sense, aka navigating the markets. And so the more you come back, the more in sync you come back to that ability rather than having rigid rules or system, the better the more positive your direction is in terms of your career, if that makes sense. However, it's difficult because you kind of have to go through the loop of doing too much and knowing what's useful, what's not, at least to you, and then coming back sort of full circle. Which is why I come back full circle to the original sin of a trader is trying to make a infinite process finite, right? Once again,
Right.
yeah,
Right. Yeah. Yeah. No, really, really great stuff. I think, Bogdan, we're going to have you back again for another round here.
yeah. No, that'll be very good.
So if you can share again, so people can at least download and get a taste of the book. Yeah, there it is,
Yeah.
tradersofourtime.com, and sign up for that, and you'll give chapter one out for free.
Yes, yeah, and you can explore the book, get a taste for the book, get a taste for the writing. It's kind of like a flashlight. You see the other book, you'll be introduced a lot deeper to the traders, the story, and yeah, understand what the purpose of the book is essentially.
Excellent, excellent. No other questions, Bogdan?
Yeah, I think we take them all off. Thank you so much, everyone. Thank you so much, Bruce. Once my immense gratitude for yourself, Bruce, and everyone joining in. I hope it was the hour and a half was useful and productive. Um, and yeah, very happy to do a follow on if you'll have me back.
Excellent, excellent. Yeah, thank you very much, Bogdan.
Thank you, guys. I will log off here.
All right, bye bye.